Everyone is talking about the Fed rate cut, but let's be honest, most of them are repeating the headline. Today I will show you what nobody tells you about how US interest rate cuts actually impact Indian markets. The effects are not simple as they sound. So the US Fed cuts rates. What does that mean? Cheaper borrowing in the US and also more liquidity, and a signal that the US economy might be slowing down. But here's the twist, the decision in Washington directly shakes Dalal Street in India. Now you might ask why India should care about what Powell does sitting in the US. The truth is, global money doesn't respect borders, and that's where the hidden impacts begins. Foreign institutional investors control billions of dollars in Indian stocks and bonds. When US rates fall, US bonds look less attractive. Money starts flowing into emerging markets like India and other emerging markets, and this often pushes Nifty and Sensex higher, especially in sectors like banking, IT, and autos. But wait, before you get too excited, here's what nobody talks about. A Fed rate cut doesn't mean always a bull run for India. So a rate cut can weaken the US dollar if the rupee strengthens. IT exports like Infosys and TCS actually lose out because they earn in dollars. Meanwhile, the bank would enjoy the lower interest rates. This is why you see mixed reactions in Indian markets after the rate cut news. Here's another layer. When the Fed cuts, global liquidity rises and money rushes into gold and oil. Gold becomes more expensive in India, impacting demand. Oil prices rising means higher import bills for India. So bad news for inflation and fiscal deficit. So the reality is US rate cuts is a double-edged sword for India. On one hand, FIIs pumps money into our market. On the other hand, currency swings and commodity shocks can hurt our market. And the final impact depends on one thing, how our RBI responds. So if RBI also cuts rates, liquidity in India rises, markets will go bullish. But if inflation is high, RBI stays cautious. So India's fate is not just about what the Fed does, but how our central bank balances growth versus inflation. So the next time when you hear Fed rate cut, don't just assume it's a bullish market for India always. The real picture is a cocktail of FII inflows, rupee dollar moves, oil prices, and RBI actions. And that's the insight very few people share with you. If you felt this breakdown helpful, then do hit that like button and also share this video with all your friends. Don't forget to subscribe and also comment and let me know that which sector do you think will go up in the next 6 months considering the rate cuts and upcoming rate cuts.